Joining us right now to talk energy prices is Helima Croft, RBC Capital Markets Managing Director, also Global Head of Commodity Strategy. She's also a CNBC contributor. And Helima, always good to see you. Thanks for being here this morning.
Thank you for having me on.
So is it fair to say that you were surprised to see WTI fall as low as $68 and change last week? Or what gives? I know we're worried about the economy, but we're also worried about a shortage of oil long term.
I mean, macro concerns have really been hammering oil prices. Recession concerns, rate hike concerns, also a sense that maybe Chinese growth isn't picking up as much as expected. But right now, with recession fears starting to recede, I think market participants will start to focus on the fact that these OPEC cuts that were announced in April are now coming into place. And we are going into another OPEC meeting in just a couple of weeks. So I do think the focus will soon be shifting to summer driving season and what is happening with oil supplies.
What do you think OPEC's likely to do with another meeting coming up? You think there's the potential for additional cuts?
Well, I think it's really interesting that we did not know till last week whether virtual or whether they would go in person. They have just announced this cut in April. So there had been some sense that maybe they would take a pass, go virtual, make it basically a non-story. But they announced last week that they are going in person. We will be in Vienna on June 4th. And that raises the expectation of additional OPEC action. These OPEC countries are very committed. A small number of them especially have very important development programs, they have big spending needs, and I don't think they want to risk another fallback in oil prices.
Helima, we know how volatile these prices can be, and every bit of information that gives us some suggestion the economy's up or down has been really hammering things. But we are getting closer to that summer driving season. You think that there's a point where the immediate demand picture starts to take over?
I mean, again, I think that once you can get past recessionary and rate hike concerns, I mean, oil will struggle in the sort of macro wall of worries scenario. But if those fears start to recede, I do think there'll be a greater emphasis on the fundamentals, and a greater emphasis on, what we're seeing in countries like India, where demand has been really strong. China may have been more muted than anticipated, but Chinese demand is growing. We are heading into summer driving season. And again, these very important OPEC cuts will start to take effect. And I think also there are these other supply stories that we haven't necessarily been focusing on, which could become more material. For example, there's a very significant Iraqi pipeline, 475,000 barrels a day, taking crude from the north to Turkey. That has been down for several weeks. So I do think as we get into summer, these supply stories will start to take impact.
What was the level that the Biden administration said that it would refill the Strategic Petroleum Reserve at? You think we hit that? And, are they going to miss their opportunity again?
Well, they have said that they will refill if it's in the 67 to 72 range WTI, but they say they cannot refill when they're in the middle of a sale. It's a congressionally mandated sale that will take place this summer. So they're saying come fall, if prices are trending directionally down, that's when they would rebuy for the SPR. But of course, market participants are somewhat skeptical, saying you've missed previous windows. What is the definition of trending down? How long does it have to be there? But Biden administration officials continue to say that they are committed to refilling the SPR.